discussion. And now Espen is good morning. He's going to want to have a discussion. Good morning, one-on-one with the CEO of Awilco. So thank you, gentlemen, John, for being with us. I would be grateful if you can keep the sign.
Sure. This one works? Oops, sorry. Good morning, everyone. Sorry for that. We're going to pick up where Gonzalo left off on the LNG market and the spot market. The spot market is pretty much the leading indicator for LNG traders overall, and it's also quite impactful in terms of the share prices of some of these listed names. So for all that, who's better to have here than Skule with Awilco LNG? Welcome.
Thank you.
John, we're now approaching mid-September. Your tri-fuels are earning 60 a day roughly in the spot market. It's a bit lower than last year, and then we all know what happened in October of last year. Suddenly, big spike in freight rates, and you're earning 150 a day or even more. I guess it's somewhat of a curveball for a first question, but why aren't the spot market moving yet, do you think?
Well, it's a good question. I think it's unfortunately, or maybe even fortunately, it's not like last year's market swings are repeatable the year after. I think when you look at last year and what happened last year, you have to go back even 1 year further, where the players were, all the buyers were basically not taking stocks for the winter, as I think everyone was assuming it was going to be a mild winter. We had. I was actually in Tokyo in November 2017, and they had snow for the first time in 54 years, and all the buyers went crazy. So prices basically doubled. Rates went up, which was the first improvement we saw in freight rates for several years. And so what do you do the next year? Well, you're going to make sure that you don't do the same mistake. You don't want to slow down, or you don't want to get caught out like you did the year before. Everybody thinks alike, so everybody takes a lot of cover. And guess what? The weather didn't go cold. So there was too much LNG on stock and on ships. So ships got delayed, and so freight rates took off simply because 20 additional ships were storing. So what do we do this year? Well, you're certainly not going to make the same mistake as you did last year. So, there's no question that we will have a winter market this year as well. I'm not going to tell you what week it happens. It could get pushed a little bit slower later than certainly last year. Is it going to go as high as last year? Well, on the face of it, last year was all-time high, with some deals being done over 200,000 barrels a day. It took 20 ships storing for a few weeks to make that happen. Could that happen again? Most certainly. Will it? Well, I hope so.
Yeah. I guess one of the other differences this year versus last year is the product prices. You had very high prices in Asia during the winter time, and I guess this year it's been kind of a massive divergence between oil prices and gas prices. The Henry Hub is at 2, and the Far East prices and the European prices are all sub 5. How important is the kind of the LNG prices for the spot market, do you think?
Well, LNG gets produced basically no matter what, because the cost of production is very low when the terminal is there. So I'm not worried about cargoes not being produced or lifted. Although, of course, in theory you can say that it could happen, but I don't see it happening. I think what, in general, after almost 30 years in shipping, I've seen that willingness to pay is certainly higher when the demand is there. So yes, there's a lot of LNG. But prices are very low. Obviously, reluctance to pay up is greater when prices are low. But that having been said, ships are going to ask for as much as they can get, or owners. But in general, maybe a little bit easier when demand is driving prices rather than supply.
Yeah. I guess demand has been very strong in Europe this year. It's essentially absorbing almost all of the incremental LNG. Is it just acting as a sink for demand not coming elsewhere, or is it just demand that can be there for to stay, you think?
Well, certainly a lot of, I mean, Europe has doubled LNG imports this year, or first half this year. We have also at the same time doubled gas storage levels to last I heard was 94% in total in Europe, which also includes some non-LNG importing nations, which are not as high. So I think LNG accessible storage is probably even higher than 94%. And that happens in August when we should have just depleted last summer's or the summer's cooling demand. Normally the stocks are full before winter. So there's a limit to what Europe can take, and I think on the face of it, I'm no expert on gas prices, but I would be surprised if European gas prices don't go down before the winter, all else equal. Which means that we could get an open arbitrage again towards the east, and certainly more U.S. LNG will have to go further or elsewhere, and everywhere else is basically further. So yeah, there's a limit to how much Europe can take. Although there's certainly, with these prices, there's incentive to burn more gas. There's no question.
Yeah. I guess finally on the demand side, it's always a bit tricky to have an opinion on some of the traditional off-takers in Asia, Japan, Korea, but there's certainly been a downwards trends on kind of import levels. For you, I mean, what's kind of the main factors you would look at for these countries, either on the upside or downside?
Well, for Japan and Korea, I think first of all they haven't been able to take advantage of the low prices, gas prices, because everything they're importing is on long-term contracts. So demand hasn't actually picked up where it could, and I think going into the winter they could certainly see the benefit of these low prices or lower prices. I think last year was a bit special in Korea because of nuclear outages, which have reversed to a certain extent this year. It's difficult to guess what happens. We know that from a political point of view, Korea has made, or the Korean government has made public statements where they want to change more gas, less coal. So that's obviously good. But I mean, it's almost as it doesn't really matter what they do because China is driving everything. Chinese imports this year are in percentage terms half of what they were last year, so they're down to 20%. But they still imported 3 million tons more first half this year than they did in 2016.
Yeah.
It's almost difficult to gather.
And kind of on that note, I mean, it's still a bit hard to, if you do the math on liquefaction and you match it with the amount of deliveries, 2019, 2020, and probably majority of 2021 should be good years for ship owners. But we've seen, almost 100 orders since January of 18, and 100 orders was essentially the deficit that we saw, a couple years ago. So, you think ship owners have, done it again by over-ordering?
No. I mean, if you look at total LNG production, there's 125 million tons under construction. That should imply about, in historical terms, 160 ships. More than half of the new production is coming from the U.S., which, depending on where it goes, requires anything from 1.2 to 2.4 ships per million tons. So, could it be periods where ships are being delivered ahead of new capacity? Certainly. But then, of course, we have 20% of the existing fleet, which is commercially challenged. Old steamships, smaller sizes, that from a financial point of view have no way to compete.
Yeah.
So, there are clever people ordering LNG carriers today. Of course, I know that some owners with a new building fleet are saying it's time to stop ordering, but yeah, no, I'm not worried about the order book as such. No.
I guess the other side of the equation, I mean, you mentioned steam turbines. I think there's 70 or so was built prior to 2000. They're not as efficient as the TFDs, and certainly not as efficient as the Megis and XTFs. Is there a future for these first, second-gen vessels after 2020?
Oh, there's going to be niches where they fit the bill, where they've been built to serve a project with a set discharge, and some of these will certainly be able to find a home. I think where we, there's a, as you say, there's 75 ships coming off long-term contracts, 19, 20, 21, 22, and some of them will obviously be replaced. The problem is, of course, that these projects are based, they're scheduled years in advance with these ships. So even if you look at the financial return or economic return, then changing from 125 to 175, I mean, it makes so much sense, it's ridiculous. But then you basically have to change all the ships and the whole program. So, and that doesn't happen. Yeah. It's just impossible for the whole chain to change overnight. So I think you'll see a sort of a gradual increase in size, and therefore, you know, we'll see some phasing out, but unfortunately, I don't think we'll just wipe them out in one go.
Yeah. You've been trading spot vessels for quite some time now. I think one of the question they get from a lot of the investors is essentially the difference between the broker rates and the realized rates. And I think, you know, there's a peer of yours who's been doing this for almost 10 years, and within that 10-year period, the average rate is around 70,000 a day for a tri-fuel, and their net earnings is around 35. So essentially, they're getting 50% of the headline rates. And I think that number is pretty comparable for this year. So, you know, I mean, why is there such a big difference? And you know, what's the factors explaining that?
Bad broker assessments? No, sorry. I think it's very difficult for brokers to assess what earnings are. You assess what, you know what the market is and what it pays. And of course, the higher the market, the more ballast you get compensated, and the lower the market, the less you get compensated. To a certain extent, you don't even get compensated for ballast when the market is really weak, which means that your earning is less than half of the headline rate. I mean, it should be possible to publicize earnings rather than rates. Yeah. But I guess nobody so far has had the incentive to do so.
I mean, it's 35 for a TFD, that's a loss-making, you know, for an extended period of time. I mean, why are people, you know, even bothering with this if that's kind of the outcome? Or do you think that will change? You know, is there a growing need for spots?
Why do people play the lottery? Sorry, it's a good question. I think you know, fundamentally, everything looks extremely good on LNG transportation, and there's so much. There's so many reasons why it should be the rate should be higher, and then you know, there's the potential of you know, fantastic returns for long periods of time when it does happen. But it's history has proven that it's difficult to trade in the spot market. Of course, in the same time, I think it's fair to say that the spot market has been developing as well. I mean, LNG has been you know, if you go back 10 years. Today, the short-term spot trade is more than double what it was 10 years ago. Yeah. So there is a spot market today, whereas 10 years ago there wasn't really, and you would get extended idle times.
Very good. Final question, John. I mean, there's a big LNG conference next week in Houston, the gas day. I know you're not going, but you've tended to go in the past. What do you think the ship owners and the traders and the cargo owners are talking about this year?
Contango, storage, gas prices, FID on new liquefaction plants. I mean, it's a phenomenal, you know, sign for us anyway. When you see this year with all-time low gas prices, we've seen 64 million tons of LNG production FID'd. You know, there's no dent in the LNG story on the long term. There's another 800 million tons of production capacity under various stages of planning. Which is almost 3 times last year's total production. So, yeah, I think that's you know, there's still FIDs to be made, and there's but obviously, you know, for how long is the gas price going to stay this low?
Yeah. Very good. On that note, John, thank you very much.
Likewise.